The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. And start out the show here with someone had a question about wanting to buy the grains after we've had this big drop that we had. And we're going to have Rich Anderson on tomorrow. He's unable to come on today. He's just too swamped. He's just overwhelmed with paperwork. So we'll have him on tomorrow and talk to him. Also, I was a little too quick last night. I didn't give Norm Winsky, yesterday morning, Norm Winsky enough time. And I'm going to have Norm back on Monday because he's got some astrological things that he thinks are important to share with us. And you know, he's been pretty good, so we got to pay attention to him. But anyway, I wanted to start with this chart of Alibaba because, you know, when it first came out, you'll see on the left there, last September, we had a situation was on the floor of the exchange. Everybody was going crazy for this stock. And as you can see, it went down for almost a month, and then it made a three drive to a bottom pattern. And this is what you need to do is when you're in these markets, you don't have to try to catch a falling knife. You know, wait for a pattern like a butterfly or a three drive pattern. Those are the ones that are best for picking bottoms. Find one that's pretty symmetrical. You know what your risk is at that point, and then you do it. The second question that someone had in the den was about a mutual fund that they had, and this mutual fund was not doing very well. And as a matter of fact, the gentleman said that he was doing far better than the mutual fund. Well, then that's very simple. Just do your own thing because the mutual fund doesn't have any skin in the game. Plus, they're charging you a pretty hefty percentage to manage your money. So just remember, a good way to look at this, if you look at Investors Business Daily, if you'll go into their section on mutual funds, you'll notice there's a section in there that they show you that 85% of the mutual funds do not outperform the S&P 500. That's a pretty strong statistic, but that's just the way it is, as my grandson would say. So the second part of this is I wanted to show you here on this Alibaba chart that I did this. I've had this in here for well over. It's been almost a year since I put this in, because on the day that the market made a new high, there were two people on for T. Rowe Price talking about the huge investment that they had made in Alibaba, and they were in it for the long term. That was at 119. Now we're at 74. That is a what we have to look at. Bill O'Neill does a great job with Investors Business Daily. I've known Bill for a very long time. My daughter's first date was with Bill's son, and we do know the family and stuff, but he's a really sharp guy. But boy, he has the real cojones, folks. He risked everything to beat the Wall Street Journal. He really did. He did, and it paid big dividends for him. But his daily graphs are fantastic, and he's done a great deal for our business, and he's a real gentleman, along with the people that he works with. So the next thing I wanted to talk to you about was the fact. Let's start out with the DAX here, because there's just two things that I really think that are very important today as far as what's going on. I just want to show you the volatility in the DAX, folks, just to give you an idea how volatile this is. Now, remember, these swings that you're looking at today are equivalent to 50 S&P points. As you can see, the market gapped up quite a bit on August the 13th. Then we went down and filled the gap exactly with a beautiful ABCD pattern. That was a Gartley at a 50% level. Then we went up and made a new high at the 61% retracement of the previous day's low, and now we're challenging the lows of the day. That's a $10,000 move. Actually, it's a little more than 10,000. say 5. Yeah, it's $10,000 move in points in just a matter of what are you talking about, 6 hours. So this is one wild puppy. So just remember that if you trade it, it's a biggie. So you gotta watch it very, very closely. All right, now there is something that I'm going to ask someone in the den to do, and there's an article that is in Zero Hedge from Phoenix Capital. And I would like one of you smart guys here at the Tiger TV to post this in here because it's from Phoenix Capital. It's about the Chinese devaluation. It's the best example or explanation from an economic viewpoint of what's actually happened. I mean, it really is. Well, hey, this is my opinion. I think it is. Going back to my days at, Indiana when I had an MBA back when they still had typewriters. But it's a really great article. It's Zero Hedge, and it's from Phoenix Capital. And they do a fabulous job of explaining what devaluations mean. And devaluations mean a great deal. When I first started my career as a stockbroker, commodity broker, office manager at Drexel Burnham, the big thing in California was the interest rates were really, really high because inflation was so high. So the banks in Mexico were offering 24% interest and also 30% interest as opposed to 10% interest in the United States. And several of my neighbors wanted to invest in Mexico. And I spent a great deal of time explaining to them how that worked, that, they're going to have, a 30% interest rate, and then they wake up in the morning and they've devalued 10 for 1. Now you have a 3% interest rate, or you still have a 30% interest rate, but you have 1/10 of your money. And they did that in 1976 is when they did it. The first time. They've done it several times since then. So that's what happens when a devaluation occurs. It's really, I don't see a currency war here, folks, because the euro has been acting, absolutely perfectly. It went up to that 112 yesterday, which was the 61% retracement of the big move, and then we, backed off. That's it. There you go. It's in the Tiger Den. It's from Zero Hedge, and it's about central banks losing control. It's from Phoenix Capital. It's a really good article, and it's not just the Chinese central bank, it's the other central banks also, and it's due to this quantitative easing, folks. That's wherein lies the problem, is the quantitative easing. All we have to do is to look at two charts to literally keep you awake at night. And the first one I'm going to put up here is the first one is from the China's credit boom over the past, let me get this lined up, there we go. The China's credit boom over the last 15 years, and as you can see, it's gone from 2 trillion to 28 trillion, tenfold increase in the last 15 years in China. Well, the economy's been booming, and it's been implemented on credit. So, I don't know what's going to happen, but we've got to be really careful in here because debt is usually something that sinks the ship. Now, the last one is even more pronounced, and this is from the Federal Reserve, and it just shows you the rate of credit market instruments that are going on, and you'll be very surprised that we are in a debt bubble like we've never seen. This is, I should shut up. I gotta think about this. Let's put it this way: we live in very dangerous times, my friends. I will say one thing about this. Just look at this chart and think 1929. This is really, really scary, folks. And they think that the banks can do this. Well, you saw what happened in China. They had to close the stock market for a while. 50% of it was still closed. Just be really careful here. I probably shouldn't have scared anybody. And hey, I've been scaring everybody here for 4 years. Why would you listen to me now? Oh, well, let's see what the next one is. Okay, now we wanted to see what the market's doing. Yesterday we had this huge rally. We had a big butterfly pattern form in just about everything. Gartley pattern down at the ABCD and the NASDAQ. The NASDAQ last night rallied up to the 61% retracement, just like we did on August the 5th, just like we did on August the 10th, and just like we're coming in here into August 13th. Whether we go back down or not, I'm not sure, but the advanced decline line, the breadth of the market is still deteriorating. I mean, it is still deteriorating. This is another sign. I've never seen so many signs that something bad is going to happen, and yet there's only a few people that are concerned about it. The VIX index certainly isn't concerned about it, but you look, even earnings, I mean, you get stocks like Disney have gotten hit, and Apple and some of the others. I mean, these were the leaders, and now they're starting to waver a little bit. Even the biotech index, which had been the leader, bounced a little bit, but not as much as some of the other things yesterday. And the Dow is by far the weakest of all of the indices, and it continues to go down. So remember, any market that can give you 250 points can take 250 points away from you. So be very much aware of that. But the signs are there. In 1987, we had a currency type crash, and whether this will be the same type of thing or not, I don't think so. I think it's different because of the debt that we have this time. We have massive debt everywhere. I mean, the Fed has put in $4 trillion since 2009, and their balance sheet is certainly skewed. And, it's going to be really interesting how this turns out, but it's starting to give us ideas that there might be something that could be amiss in some of these markets. And just be really careful, folks, because you've got to protect yourself. The next one I wanted to talk about here is our Treasury bond market here. Give me 1 second here to get the chart up. I want to do the notes first because they are as perfect as you could possibly be. The number that we were looking at yesterday went up exactly to it. We've backed off a full point in the notes, which is equivalent to a little over 2 points in the Treasury bonds, but we completed that ABCD pattern perfectly. The low from June the 8th to the high that we made on July the 8th was a month, and the low we made from the 12th of July to the high we made yesterday was exactly a month. So you had a perfect A, B equals CD. And not only that, if you look at this chart really closely, and we did do this yesterday, but look at it again, because we'll see it over and over again, you'll see the green lines that are pointing into those highs that we made into April and then also into August. Those were perfectly equal charts. That's exactly the equal type of move that we've had. And this is the same thing that happened in the S&P yesterday. We had a big rally a week or so ago, and then we went down and made new lows. We had that same type of rally yesterday. Now, whether that's going to continue to go down or not, I don't know. But we're in an area where we've got some real serious underlying weakness in the stock market, and it's being masked by certain things, but the masks on some of these things, are coming off. We still got stocks like Nike and Starbucks and, Gilead and Chipotle Grill and a bunch of others that are still holding things up, but a lot of these other stocks have already started, to move around. Look at a stock like Alibaba. I mean, who would argue that that's not a great stock? I mean, that's the Google of I believe that's the Google of Europe, as I recall, of Asia, and look what they've done to that. So, well, maybe it's a great buying opportunity for it. I don't know, but we'll have to wait and see. Okay, when we come back, we're going to take a look at the gold and silver.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I posted the chart, the hourly chart of the 30-year Treasury bond, and you can see that we made a 3-drive to a top pattern. The little circles, the little cycle circles that you see there are nothing more than how I measure from low to high and low to high to see if there's any symmetry in the ABCD move, because if you have that, your confidence in that trade is greatly enhanced. It's when they're skewed. If you have a big gap in the CD leg, or if the CD leg extends, 1.27 past or 1.618 past the AB leg, then that's when the problems arise, and you never know which ones are going to work. That's why what you have to do is to try to find the pattern that you think is the best and keep working with it, and over a period of time the patterns will definitely, or most of the time, we'll try to figure out where you're supposed to be. Now, we're going to take a look now at the gold market. We're up now over $60 off of the low, so we're starting to see signs, not yet, but there might be some signs coming in where some of these people might start to cover the shorts. Since August the 7th, we're up $45. So in this week alone, we're up $35. So this has had a pretty good run so far, and thus far off the last correction, we're only off 50. We're making a 50% retracement down here at the 1113 level. So we'll wait and see. Now we have a little bit clearer picture in the silver market than we do in the gold market, at least from the way that I'm looking at it. And I'll just share with you, what I'm seeing here in silver, because if we go back historically and look at these rallies that we've had, if you'll go back and you'll look into April of last year, you see where I've marked where it says start of the rally. The market had a huge move there of about a little over $1 an ounce. And that was the start of the rally. However, then there was a pullback to the 78% retracement level. Well, if we go over to where we are now, that same move occurred, exactly the same type of move. It was $1.20 back in April, and here it is in August. We rallied $1.20. So what I'm expecting is a pullback to either the 50% or 61% retracement in silver, much like we did in April of last year. And that's all I'm doing is following those patterns. This is still a bear market, folks. There's no question about it. We're in a bear market in everything. I mean, I don't think I think there's one commodity that I heard that was up, and that was I don't even remember. Someone told me there was one commodity. I heard it on Bloomberg. There was one commodity up, but it slips my mind what it happened to be. But anyway, this is what we're watching for in silver, for a little move down into another 30 or 40 cents lower, where we could potentially have a really low risk place to enter if you haven't bought, and if you wanted to buy more, that would be the time to do it. Now, the high that we made yesterday in silver was an exact 382 of the high we made last May, to the exact penny. It was also nearly a 786 retracement of the low and of the high in July. So some resistance has come in there at the same time, like we had this in April of last year, but it's still quite early. But this is a pattern that I'm going to be following for us, just to see if it unfolds the way that we would like to see it unfold. So that's the key to that market right now. Now, the next one we're going to take a look at here is the euro, because the euro has made a big move here. And I'll show you the one that I'm following, because this is the it's got a little too many lines on it, but you'll have to respect that, I guess, or don't look at the lines. Anyway, there's the move that we had. I wanted to show you the longer term chart in the euro, because that's the one that really brought out the figure yesterday that we were talking about, up around that 120 level. And that was the one that came in right after the report, and everything was really excited. And now we're over 100 pips lower than that. And the last time we had something like this happen, we dropped well over 300 pips. Whether that's going to be the case this time or not, remains to be seen. But the pattern is certainly there. We know that the long-term objective in the euro is at the par level, or 99, somewhere in that ballpark. So these are some of the things that we want to remember for long term. But when you're trying to trade the euro and you're looking at a target of 99, you have to put a lot of risk factor in that if you want to hang on, because even a rally like we just had from 108 to 111 112 wouldn't even have scared you, because if you're looking for it to go to 109, that's a very small percentage. Personally, I can't take that type of risk. My psychic doesn't allow for it. So I'd rather keep the losses relatively small and try it a few times. Going to take a break here, pay a few bills, and we'll be right back. And we're going to talk about the grains.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, the next chart that we're going to look at is the soybean market. This is November beans. This is the new crop that is still growing. We had a pretty strong rally here over the last 8 days, almost exactly to the 61% retracement. And then in the last few days, you saw what happened yesterday with the market down over 80 cents per bushel. It was a huge surprise. The crop was much better than anyone anticipated, and that brought corn and beans down quite a bit, and it also dropped wheat. Now, as we talked about the chart for Alibaba when we started the program about the waiting for patterns to try to find, a place to enter, what we're having here now is a potential ABCD here into new lows in the soybean market around the $8.75 per bushel level. That's 40 cents from where we are right now. And if we gave 90 cents back in one day, we could certainly, over the next few days, give another 40 cents back. So what I would do is I would wait for that pattern to unfold. Now, if you go to a smaller time frame, you might find a smaller pattern, which is certainly acceptable to trade, but, wait for the pattern. Technical analysis is based on these bar charts. It's not based on the fundamentals of these things, so that's the only edge that you have. So you have to try to use that, as your edge and see if it's going to help you. So the strategy now in beans would be to give it a little bit of time here and see if we can get down here to this 880, 875 level per bushel, and that would be a really nice pattern unfold. Maybe another pattern will happen before that. Remember, the old lows came in at 897, so we're only less than 20 cents away from those old lows. Maybe this is a major double bottom. I don't see it as that right now because of this big ABCD pattern, but that's certainly a possibility. But not after a day like yesterday. That's a giant warning sign for technical analysis. That tells you there's a game changer. There's been a change of economic thought in the grain markets, believe me, with that much of a debacle. I mean, it surprised a whole lot of people. Fortunately, our good friend Rich Anderson wasn't too surprised. He thought that there could be a little bit of a revision, but not as much as occurred. But we'll see if what's going to happen from this level. Now, the next one that we want to watch is the wheat market here. If you want to buy a grain, folks, the one to watch would be the wheat, because there was a lot of sympathetic selling in wheat, a lot of it related to, margin call selling and stuff like that. So if we take a look at wheat, you'll see that in the wheat market, we did break down quite a bit, but we haven't taken out the lows of last May or June, which is good. Now we've gone down and we've made a 1.27 of the week's expansions. So what I would do here, if you want to pick something to buy, follow the wheat market, because the wheat was by far the less weak. And as Jesse Livermore said in his book, Reminiscences of a Stock Operator, you always want to buy things that are the strongest and sell things that are the weakest. That's the thing that you want to do. And if by any chance you should be hit with a margin call, the best thing to do is to get rid of the things that are hurting you, not the things that are making you money. That's really the worst thing that people can do. Merrill Lynch did a study on this from 1978 through 1988, I believe, a 10-year study of clients that were in there. They had a huge commodity department at that time. They since disbanded it, and they thought that commodities were going to go lower, and they were certainly right. But what happened is that people get on margin call. The first thing they do is liquidate the things that are profitable, and they keep the things that are losing, hoping that they're going to come back, which is the wrong things to do. So keep those things in mind. And if you haven't read Jesse Livermore's book, You Shouldn't Be Trading, because that's probably one of the best books ever written about trading. I've read that book at least 50 times. I still don't understand it. No, I've read it 50 times, but it's really a fabulous book. Livermore's office in New York, it was in the Chrysler Building on the 35th floor. It was still open as a museum in the early 90s. It's been shut down now. I think an insurance company took it over, but you could go in and you could see the chalkboard where his ticker tape people were marking things up. It was really something to see that, a great moment in history that we no longer have. So, okay, now we go to the corn. The corn was the big shocker, because everybody thought that the corn was never going to go down, and corn dropped 50 cents a bushel, which is about 10% of its value, which is in fact what it did do. And let's just get the daily up here so we can see it a little bit better. And you'll see that we've already gone into new lows now in corn, and we'll have that same ABCD. Let me put that ABCD in here so you can see that it's a great deal lower than where we are now. In fact, it's wow, it's a lot lower. It's 40 cents. I don't know if we're going to do that or not, but we certainly could, because it's certainly going down with all the other stuff. So we'll see. Okay, there's the corn chart And as you can see, the BC rally that we had last week only went to the exact 382 retracement. Remember, the beans went to the 61% retracement, and the corn went to the 382 retracement. So that was telling us that we have, there's a little bit of suspect in that rally. And then it closed badly before the report, and that was another indication that you certainly don't want to be gambling into something that's not going in the direction that you think it's going to go. So we want to keep that in mind. All right, now the next thing that we're going to do is we have a request to take a look at Apple. Apple had a big reversal yesterday. That was probably the thing that made the market turn the most, is when we hit that ABCD pattern in the Apple, that it was going to be quite a bit stronger. But I'll put it up here and show you. All we did is we went up and we it looks like we're a little higher today. But anyway, we did make a big ABCD down at the 786. Oh, just a second. I did something wrong here. Easy, cowboy. Hold on. We went down to the 786 at that 109 level, and we promptly rallied to the 61% retracement of the previous high. And right now looks like we're up a bit on the day. And yeah, we are up slightly on the day. So we'll see what's going to happen with that. All right, we have a question from one of our dinners about the price of what was it? Oh, the banking index. Just one second. I thought it was a stock, but it's a banking index. And you'll see that here is this one is also turned down. We made a ABCD pattern to the downside on this yesterday. It was a nice Gartley pattern. And came right at the 786. We'll put this in here so we can take a look at it. And you'll see that we have gone down before that. Now, yesterday I didn't get a chance to discuss the death cross that everybody on the news is talking about, and I wanted to go through that with you. I went to Investopedia to take a look at what the definition of a death cross is, and it's nothing more than the slow moving average over a longer moving average. And there was a fellow on today on Bloomberg that spent a half hour disputing this death cross phenomenon. He went back, and over a period of 35 years, he found 3 examples where it didn't work. He didn't go in and show you all the examples that it did work. It just showed you the examples that didn't work. So that's basically it. And we have this death cross is certainly in play right now with the markets that we follow. And the first one we're going to look at here is, and really the one that is the most important of all, is the New York Stock Exchange Index. And as you can see here, we are definitely in a death cross phenomenon with that, also with the Russell. And the only one that is not is the NASDAQ, and it's not very far away. Remember that the Bradley model says that we should be going down during the month of August into late August and early September, around the 3rd of September, which happens to be the anniversary date of the high in the stock market in 1929, September 3rd. That's a key Bradley date. And we also have a date today. Today's a pretty strong date. And whether that was a rally yesterday or not, we have to wait and see. But it was still, really early in the game looking at these things. So that is what the death cross is. It's a combination of moving averages. And basically, if you go back and look at March, when we had that situation, we crossed below it, and then in 3 days we went back above it, and that kept us in new highs until where we are now. But if you look at this New York Stock Exchange chart, since from March till August, we have a series of lower highs and lower lows and massive distribution. And we look at the breadth that we look at every day. The breadth of the market is getting worse and worse. We're having more new lows and new highs, and the number of stocks advancing versus the number of stocks declining. Even on big days like we had yesterday, it was not much of a difference. I mean, it was up. There was certainly a difference, but not what you would expect in a really bull market. Now, there's just many things out here that just scare me. I mean, and I shouldn't be scared, I guess. I'm too old to be scared. But I remember in 1974, when I should have been scared, these same types of things that were happening are happening now. And it's very similar to the situation like we had in 1987 when we had the big move down. But the difference is that we've never had debt like this before, folks. I mean, we have debt upon debt upon debt, and it's really quite spectacular when you stop to think of it. Now, another market that I wanted to talk to you about here that we mentioned many times, that we've said has been in a bear market for quite some time, is the junk bond market. And if we look at the junk bond market here, you can see that we've got another 5 or 6% to go just to make the ABCD pattern, because we topped back in March, just like we did in the bonds, and now we're starting to move to the downside. The problem is not in the stock markets of the world, folks. The problem is in the debt market. It is a credit cycle. We've never seen anything like this in the history of the world. So we don't know how it's going to end, but all I know is that debt is not a good thing. It's that's the Thomas Jefferson stuff. Let me control your currency, and I'll control the country, and that's pretty much what you're looking at. But this debt thing is beyond wildest dreams. We've got ours is bad, but China is by far the worst. And of course, they have a controlled economy, and everybody thinks they can control that, but history says that does not work that way. But we'll wait and see if that's going to be the case or not. Okay, now we have to get over to we have one other question about the grains, and if you'll give me 1 second, I will get it ready here for you, and we'll take a look at it here. So we have a credit about. So I'm sorry, folks. We have a question about crude oil. Let me get it up here in the market here, so we can take a look at it here. We're making new lows now in crude oil, and the only thing that I can see in crude oil is there's a potential for a 3 drive to a bottom pattern. We're going to new lows in crude. I don't see how we're not going to do it, because the next level to look at this, and John Logan has been on this like a cheap suit. He has had this thing wired as he had the Japanese yen. But if we look at this crude oil on a 30-minute basis, you'll see that the next price level is down another $1.30 from where we are right now. And the way it dropped on the 11th, we could be there today. And that will be into new low ground for the whole thing, because I think we are breaking into new low ground right now on a daily basis. So the next profit objective on this would be, or the next level of support would be 41.20. That's another thing that's wrong with this picture, folks, with this credit debt that we have. And then you look at the price of commodities. Give me a break. I mean, you don't have to be a rocket scientist to figure out something's not right. Someone's not buying the products to make the products. If you look at the transportation index, it's going down too. So it makes you think that maybe there's something not right. So be careful. That's all I can say. I can say no more. Okay, now we have another one that someone asked us about, and that is we already covered the gold market, but let's see what the other question was. I don't even see it in here. Uh-oh, here it is. This is a question about international business machines. Does anybody know the symbol for that? Hold on. It's one of the great stocks of the world. The only company that I did not get an offer to go to work for when I graduated out of graduate school was IBM. They said they had the worst score of anybody for computers that they had ever seen, and they were right. Okay, this is IBM. We had the big rally, of course, a couple of weeks ago. Then we had the bad earnings report, the gap down. We're now below the 786. We're approaching the lows of January. This market has been in a bear market for well over 2 years, and it being a Dow stock, you can imagine if it had been strong, where the Dow could possibly be. But this stock has been under a great deal of pressure and continues, to sell off. So we'll see if that's going to continue or not. We also have a question about another of my favorite stocks. This was a family stock that was in the family for 70 years, I believe, and that is Minnesota Mining and Manufacturing. 877-927-6648.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I posted a chart of 3M, Minnesota Mining and Manufacturing, one of the greatest companies on this planet. And I happen to know a couple people that used to work there. But anyway, this has got a beautiful Gartley pattern. It stopped yesterday exactly at the 61% retracement. And so far it has held. As long as we stay above yesterday's low, this should be okay. But this is a situation, if you've been waiting to buy it, this is the time. You don't have to risk very much here. I know the moving averages are still turning down, but the patterns are there. The ratios are there. This is where your risk is probably the smallest. If you're waiting for the moving averages to turn, it'll probably be safer, but you're going to have to probably pay up on it. Would be my guess. That's the possibility of that happening. So we want to to keep that in mind. Now we will almost assuredly have Rich Anderson on our program tomorrow, God willing, and I hope he'll have everything ready for us to take a look at some of the things that we're watching here. So that's what we're following right now this morning. Just be really careful, folks. This thing that's happening in China is very, very important. I think that article from Phoenix Capital that was posted here in the den today from Zero Hedge, everyone should read that, because it really tells you what's happening in China and what they're doing. They have panicked. They have pulled the panic button over there, folks, and that is usually not a good thing to do. So just watch it very, very closely. That's the bottom line of what we're looking at here. So that's what my final words here of wisdom would be, that to read that article, because it's not about the fundamentals or anything. It's just about the physical things of what's happening when you devalue a currency, much like what I described yesterday about how Mexico devalued back in 1976. It was the same thing. They give interest rates at a certain price, and the next day, bada bing, bada boom, you're sitting there with a 30% interest rate with only 10% of your money. So remember Bernard Baruch's famous saying, it is much better to be concerned on the return of your money than the return on your money. Live every day in an attitude of gratitude, and do something nice for someone who has a lot less than you, because we certainly have a lot to be thankful for here at TFNN. See you tomorrow.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.